Great. So with that, we reached to 5:01 and this is our scheduled time. Thank you so much everyone for joining. Good evening, good afternoon, good morning. For the part of the world you're joining, my name is Pal Gacha and welcome to Elite CISO's new series called Elite CISO Talk Series, where we invite industry expert, our CISO friends to talk on the great topic today. So let me also introduce Mr. Nirmal John, a growth auditor of ET Prime to host this event. Over to you, Nirmal.
Thank you so much, Fal. Thank you for having me today. It's not often that one gets to have a conversation with so many elite CISOs at once. I think this is a panel that puts the elite in elite CISOs. This is really that kind of a panel that we have today, and it's great that we are starting off the year in this fashion. This talk today is about demystifying cybersecurity risk and quantification. Now, I've been writing about cybersecurity for about on and off about 10 years now. And one of the things that I've always wondered about is how exactly does measurement happen in cybersecurity, right? Now, over the years, I think it's clearly something that the industry itself has thought about a lot, and things have moved across a lot. Now, to get a sense of how Google sees it, I just did a quick Google search, right? And the definition that interested me the most was, of course, in Wikipedia, right? Now I'm going to say it out loud now. Cyber risk quantification is a process of evaluating the cyber risk that have been identified and then validating, measuring, analyzing the available cyber data using mathematical modeling techniques to accurately represent the organization cybersecurity environment in a manner that can be used to make informed cybersecurity infrastructure investment and risk transfer decisions. That is how complicated today's topic really is. I don't understand it. To be honest, I would love it if the panelists today would take me and all of who've tuned in to understand this complex topic a little bit better. Uh, First, some house rules before I get into the conversation, right? Each of the panelists will have about 2.5, 3 minutes to reply to each question. Also, the guests, I want this to be an open conversation essentially. So whoever has signed in, the audience can share their questions as and when they have, and we'll try and incorporate that along while we are having the talk itself. So with that, I would like to start with the first question. This is a question for all three of you. Oh, before that, I'm sorry. I did not introduce the panelists. We've got Rajesh Thapar, who is the CISO of Axis Bank. We've got Partha Sarathy P, who is the group CISO of a leading bank in the Middle East, and Anuprita Daga, who is from Yes Bank, CISO of Yes Bank. So without much ado, I'll go into the first question. Uh, Banking has always been at the forefront of adopting the best practices in cybersecurity because it's probably the most attacked sector, right? How has your approach to risk quantification changed over the last years? How did you go about it when all of you started out in cybersecurity, and how has things changed? I think I'll start with Rajesh.
Sure. Thanks, Nirmal. And good evening, everyone. So primarily, the risks have changed. I mean, before we come to quantification, the risks have changed. Have been there in this field for almost 19 years. I have seen it evolve from perimeter security to something which we call as all-inclusive security. Primarily, you cannot believe where it ends, where it starts and where it ends. So the risks have changed. The appetites have changed. The risk appetite primarily 15 years back or 10 years back was totally different what we have it today. The borders have changed. Investments have changed. So I'm telling you all the dynamics which are making the risk quantification much more relevant today. The investments are multiplied, and when with the investments coming in, the return on investment becomes an important factor because every organization has finite resources. I mean, finite number of people, finite number of amount of dollars that you have to spend. So when you have to spend it, the whom you go in for approvals, whom you go in for explaining risks, don't understand technical languages. You have to make them believe what can go wrong, how can you avoid that going wrong, what do you need to avoid, and what is the recurrence percentage and all that. So everything is numbers, everything is metrics. So you may start with typical KPIs, KRIs, and that has evolved over the years. And that's how it has changed from KPIs, KRIs to a very complicated, may not be as complicated as the definition which you are saying, which look like a statistician's job, but something which has a combination of weightages of various KPIs, KRIs put together and give me a quantified number, which I can translate for various reasons. It can help me prioritize my investments. It can help me defend my investments. It also is important how this factor is becoming more of, if I think of 15 years back, this quantification used to be maybe once in 6 months or once in a year exercise, because as a part of your ISO 27001 certification, you will do a CIA and there you will arrive at some number, weightages, and there you will arrive at your risk appetites. And that is where it used to end. And then next year you keep showing your improvement trends and all, and that's where it was. Today, you need it continuous. The quantification is at absolutely now. The visibility, the importance of visibility, what it is today was never earlier required. Today, you'd want to be knowing everything that's happening, the attack surface, how it is changing, whether it is not only within your organization, your vendors. So all these things put together are making that risk quantification very, very important. And that is where the role of CISOs are becoming more. I mean, I should change it. It's becoming different than it used to be. CISOs were typically seen as risk avoiding guys. Okay, I mean, if you talk to somebody who probably would have worked with me about 2003-4 time frame or 5 time frame, will we believe that, oh, if you take something to him, he's a toll gate, he will say no to it. Today, you cannot survive if you are avoiding guy. You have to get into a risk manager guy. You have to, cyber is the area where avoidance is turning into, and how do you decide the difference between avoiding and managing is coming from these numbers, is coming from these metrics, wherein you decide what is it that is right, whether you can go with an absolute number or you can go with a qualitative. Again, my personal feel is that nothing is quantitative in cyber world. I define it qualitatively quantitative, which means you are putting some probabilistic game, which again is not scientifically, mathematically proven, with some level of weightages you want to decide and go on with it, right?
Which is fair.
Other area, just 2 more points which I want before I pass it back to you. One other point is the cyber insurance is becoming a very, very pertinent and important domain. I mean, today, because every organization want to have a coverage because of various threats that are there. So how do you quantify what is the cyber coverage insurance that you need? The cyber insurance needs some mathematical model to back it up, which should give weightage to your controls, which should give weightage to your exposure, to the impact, to the annual loss that you can have, to what can go wrong, and then you arrive at that. So all that will only be possible if you have quantified, maybe to indicative values. To some level, you can quantify what is the risk posture that you are living with, or what is the cyber posture that the organization has. That is something which will define your cyber insurance need, and for the cyber insurance to weigh you, this is the premium that they need from you. So it is both sides. This is very important area which I feel is required. And the last one is InfoSec is still not a profit center. We are not a revenue generating unit. We are a cost center. We are only asking for money, but we'll have to defend it. How are we putting that money and helping the business? And that is where the quantification of risk, the maturity curve that will come in, would actually help identify, may not be proactively, but at least to some extent, all what we are asking for, all what we are doing and defending our roles, as well as the investments that we have made in the organizations. So I feel this is all what the risk quantification has changed and is important in today's world.
Partha, would you agree with Rajesh? Has that been your experience as well? You're on mute.
Can you hear me?
Yeah, loud and clear.
Okay. Hi. To start with, I just want to put a standard disclaimer. These are my personal and professional views on it. This has got no implication to the organization wherever I'm working across. Coming back to the point, yes, cyber risk quantification is becoming more and more relevant as the risk is increasing disproportionately. Slowly, the organizations are finding out, especially I would say the Bank Muscat International compromise of $45 million, Bank of Bangladesh near miss of $1 billion. This started putting the pressure on the institutions to say that yes, it is a risk and it requires to be discussed at the board level. So if you ask across, I've been in the security field for almost 18 to 20 years, give and take. Now, if you see across the importance which has come across for this is the last 10 years or so, the post Bank of Bangladesh case. Now, I agree with what Rajesh told across to say that, unfortunately, all the people above me are business people. They do not understand technology. If you talk technology, probably you will lose the connection with them and they'll actually disengage. So the best way to tell them, the business person, at least what I've seen across is what they understand is the probability and impact. Unless otherwise, you can translate your requirements into probability and impact, you will not find your engagement with those stakeholders being very fruitful. So in fact, I just took a very easy way. What I did was I just aligned the risks and the probability matrix to the operational risk framework of our bank. So if the category 5 is $10 million and above, for example, okay, category 5. So what happens across us, the second advantage this happened was it becomes very easy for them to understand it. So it is the most important thing is quantification is very important. And I also agree you cannot have an absolute quantification like an expected credit loss, what you could do in a credit risk. Okay. It is qualitatively quantitative or quantitatively qualitative. Either way, you can't tell across. It has to be somewhere hybrid in between. And that's the way you put across. And that gets the communication. And see what happens across is when you are in multiple jurisdiction, the compliance requirement also changes. Along with the compliance requirement, the risk changes accordingly. So compliance is the cost of doing business in those economic spaces. So you cannot afford to say that it is a risk which is acceptable in certain part of the world might be an unacceptable risk in certain part of the world. So it adds to the flavor of combinations where you have to take not only the threat factors, you also require to take the compliance requirement and put together, use a combination of qualitative and quantitative. And I would say the easiest one is to the business people are very aware is your operational risk thresholds of probability and impact, and create your own formula which sells locally. At the end of the day, and if you see across most of the insurance companies are also following this. The only thing is they do a normal distribution of the threats and the probability, and they try to create some type of a number. Okay, so and yeah, today that is very much required because at the end of the day, when you want a cyber insurance premium, they want a risk quantification because at the end of the day, they do not provide a cover if a risk cannot be quantified.
Exactly. Has the experience been similar for you, Anuprita? You're on mute.
Okay, so I think we all are coming from the same era, like starting from endpoint security or preventive security, and as Partha and Rajesh both have said, like we have moved beyond the preventive security to the detective security. Because and in last 2 years we have seen the adoption of digital technology has substantially increased globally. I think cybersecurity has become a very core part of the business also now. And here in this case, and as Rajesh also said that, whether we become a cost center and we remain to become a cost center, or do we remain to become a bottleneck? It is that, how even CISO has to still think about it, that do we really still only up to a risk quantification? Risk quantification is important because we have limited resources, and in the limited resources, when we look at the profitability, how do we prioritize it? So this risk quantification is must. Definitely, there is no doubt about it, and I don't think now those are the days where we see that whether we really need to do a risk quantification or not. That's not a choice now. It is option on a CISO that how easy and how soon you adopt it. You start talking the language of a business, and once you start talking the language of a business, obviously there might be a very or rather better acceptance to the risk what we are talking about. Even in business also, like for example, credit risk, market risk, these are also the business risk, right? And cyber is also a part of it. And when we talk about whether cyber as a risk, whether we qualify, so quantification is needed, and quantification need to be utilized in fixing and prioritizing the vulnerabilities or the risk. At the same time, it can be used for getting the budgets, and it can also be a enabler and a marketing tool also for the business. And that is where we need to start taking up the quantification. How do we create a enablement part of it, and how do we become a part of a sales pitch deck? That is where people, because if you're digital and you are not cyber safe, I mean, it doesn't go, right? These are the two parallel tracks, and if your train has to travel, obviously you need both the tracks to go hand in hand, right? And that is where we need to create a positioning, and quantification is one of the very important tool which talks about whether we spend money on that, whether we take the risk or not, and also if we spend money, how can we become a distinguished enabler for the business perspective. So I have a different thought process on the business side.
Right. I think we'll come to that. I think that gives a nice segue to my next question, which is to Rajesh. Now, Rajesh, who all need to know information around?
Nirmal, stop for a minute. Somebody has kept it in two systems. It's echoing. Request all the people to mute it, but for the people who are talking, so your voice is not wobbling.
Loud and clear. Am I audible now?
Yeah.
Okay, perfect. Right. I just wanted to get a sense from Rajesh. Right? Who all need to know this number that is being thrown at to quantify. Now, the reason why I asked that question, right, is because Anuprita mentioned something very interesting about how it can even be an external sort of a brand building mechanism as well, right? So I was just curious to understand your point of view. Who all need to know?
I probably am thinking who need not know in the organization in today's world, because everybody is contributing to digital transformation journeys and the payment system ecosystem evolution. So, I mean, just to start with, all the stakeholders here, I mean, the key stakeholder would be the people there on the call, CISOs. Okay, which is a direct beneficiary of that, right? So as we have covered what CISO can benefit from in the previous question, I'll not maybe get into too much of that. But who other than CISOs would also be necessary, I mean, recipients of the quantification number? I would feel some of the key teams within the CISO function, the SOC, the security operations team, maybe from a threat intel perspective or attack surface perspective, that's quantified probably because they need to prioritize what can be done and all. So cyber defense is one of the key verticals, or we may call it SOC, we may call it threat hunters and all. So that is an important area to know what is the posture that we are in, so that the focus goes right into some of those metrics. The typical one, which typically has been a KRI on vulnerability remediations and all that stuff, that's again an obvious one. CIO definitely has to know, because end of the day, the implementation maturity of the controls is measured through the risk quantification as applicable to the tech stack and all the deployments that are there. CFO is another beneficiary of all that we get out of it, maybe for multiple reasons. That one, he takes a decision on where the organization need to invest as far as the cyber stack goes, and whether those investments are actually yielding the results maybe from a business growth perspective, as Anuprita was alluding to, or primarily defending or avoiding penalties or any of those breaches, cost of breach being brought down, or if there are incidents that are there. So from all that perspective, CFO is an important recipient of that. If he sees these postures, despite the investments made, and there is quantification is indicating on contrary side, that's an alarm bells for him. CRO and the enterprise risk, operation risk, and all those verticals are important because they decide the overall risk management framework and the strategy for the organization. And a contributor of the cyber risk quantification can also be an important element for them when they evolve the years framework, or they decide on the other appetites.
Right.
The key. Sorry, you have a question?
I think I'll ask a similar from what you said. I'll ask a question to Anuprita as well. In your experience, how have you gone about communicating it to all the other stakeholders? Is there any specific learnings that you have to share?
Let me cover 3 more, and then probably, if you don't mind, I mean, the key ones, which probably these are all internal. The main stakeholder who for whom we do the quantification is the board.
Sure.
I mean, so it will be unfair if I don't include them as part of this answer.
Sure. Fair enough.
Right. So the regulator, how they weigh you is actually coming from that, because they now in these, and I can tell for Indian regulators, they are involving their own mechanisms of assessing the risks of the regulated entities. So the risk quantification from outside in view perspective is also taken up there for vendors and the business heads. So now probably the question can go down to her interest.
Yes, same question to you, Anuprita. I mean, in terms of the mechanics of communication, right? How do you do you have any learnings that you would like to share?
So I think Rajesh has really listed everyone, and his first thing was, okay, who should not be knowing? Okay, just to add, I think customer, I think because of time, I think he would have missed out that. But see, I personally feel that, whether employee or vendor or customer or the board or maybe the business head and all, I think what is very, very important is that if it touches your heart, okay, and if you think that, if this is important for me individually, okay, this is important for the business, and last 3 years, this is what we are just trying to drive that, October month when we celebrate, we try to create a scenarios that that fear factor or that conscious step of, because we are always on the edge, either we are breach or we are not breach, or, and again, if it impacts me, obviously it impacts my customer, and that is the kind of correlation what you need to build it. So our last 3 years, our objective was to touch their heart, hit hard on their heart. And if they feel that if my money is at stake, and then obviously this is what my customer's money is, and then you have to, because this is such a dry subject, this is the art, it is not a science, this is the art, that how do you make it interesting? How do you make it like, okay, if you fall from 7th floor, 8th floor or 28th floor, what is the risk point of view? So this is the quantification, what we can talk about it. And the scenarios, if you take that, this is social media, if this happens, your mail is compromised, you have got phishing mail, you have on a personal impact and everything, how does it impact you?
Right.
So last 3 years, which we were trying to, drive this awareness. And I think somewhere I feel that, okay, if I understand about my physical safety, and this is what the digital safety is also, and you start, and it's a journey, honestly, it is not like transactional. You have done the transaction and then money it is debited and then money is credited in some other account. It's just not like that. It's a journey. But once you set that one mindset, I'm sure that will carry, throughout your life. So this is what we try to do it. And you need a rigor on that. Up to a board level, not only at customer level, employee level, vendor level, board level, across the journey, what we need to see. And honestly, the board understands a lot. Like when Ukraine-Russia happens, board member were the first who talked about it, that, okay, what is our preparedness to handle the cybersecurity attacks, right? State sponsor attacks. And this has become now new norm now. So I think I think a lot of people understand. It's just that we need to make it little easy for the other person to understand and try and talk their language. Although for CISOs and for technical people, it becomes difficult. But I think this is also a journey for us to try and make as simple as that.
Right.
So yeah, there is no one frame which fits everyone, but I think the effort and the intent really matters a lot.
Understood. Understood. Can you? I think the echo is coming from your end. Can you just mute the? Right. Okay. So I think Anuprita has done something interesting earlier. She had put out a poll on LinkedIn and other social media, looking at what are the critical considerations to quantify cyber risk, right? One, insider threat, external threats, supply chain risk, and ransomware. And I think rather predictably, ransomware was seen to be the number one such vector, in terms of threat vector. It's become a painful reality across sectors. Uh, uh, I wanted to understand from Partha here, how do you go about quantifying preparedness for something that is so pervasive right now? Partha?
Hi. See, ransomware is like, it's very porous. It's extremely difficult to know from where, generally, if you see most of the ransomware attacks, people understand the manifestation, but invariably they never find out from where it started. Okay. The reason being is invariably the laptops and the desktop does not have such rigorous logging and tracking of them. Okay. Invariably, if you see the server segments in almost all organizations today will be well guarded and well, I would say relatively much engineered and kept under control, check and balance. So it is extremely difficult to say how do you quantify the risk quantification for ransomware. I can just quote. This is not my thing. It was one of an U.S. agency, U.S. company which was affected by ransomware, and I saw their risk management dashboard later than that. They had quantified to say what is the loss of business to me. Actually, they were ransomware, and 10 days they were out of business. And today, you are saying about who is bothered about information security. For that organization, information security in charge is not the CISO, the line of business heads. The line of business head tracks the information security posture of the bank. On the top of it, the interesting part is every weakness is scored, every weakness is put into a dashboard, and they ask the business person to decide what is the threshold of risk they are ready to accept it. And they motivate them to say that, okay, if these patches are done, a what if analysis to say that if these patches are done, your score improves by so much. If you can close these vulnerabilities, your score so much. And both the LOB and the IT, okay, their variable pay is directly linked to the confidence level what they maintain. So I would say, in fact, the CRO, I attended a professional organization where the CRO and the CISO came and spoke across. What happens in case of a ransomware is, it is very easy for us to discuss today when actually your organization comes to a grinding halt. You understand what it costs you. Okay, and I can tell you now the CISO is not the carrier of the cross of information security. It's a line of business, LOB in charge, who runs it. And since the LOB is the sponsor of IT, it becomes extremely easy. You can really use the carrot and stick policy towards the stakeholder being IT, because invariably, if you see across, as somebody was mentioning, the CISO picks up the concerns, he puts it across. Now his job ends there. Now he is not in charge of remediation, because review and remediation, the same person, there's a conflict of interest. So invariably, who a reviewer does not go for remediation. Now, if the remediation person is not sufficiently motivated or sufficiently not demotivated to ensure the outcomes, you will never achieve the perfect balance. Okay. The second aspect now is the regulators are becoming more and more, I would say, active, prescriptive.
Sure.
The earlier, the regulators used to ask you to do a risk assessment and start implementing controls or control objectives on the base of the risk appetite of the organization. However, now the central banks are coming with prescriptive controls to be implemented. It's more like it's like your PCI DSS, or it's going to be like a SWIFT framework. So the regulators and the board, in fact, with the geopolitical situation happening across, the concerns on the backstage actors, targeted ransoms, targeted data exfiltration. See, with the people have started talking about data as the new oil for the growth. So everybody wants the data. And if you look across, most of the countries are seeking data localization, including India to large extent. Okay. And it started with the GDPR indirectly by the Europe. So today, the data is the it is not, in fact, it is not, I would say it is an object which can earn you money. You can monetize it. So the data also has a value, a potential value. We don't have any objective formulas, models to value the data at this point of time. Two things which I can say as far the ransomware is concerned. If the organization comes to a grinding halt, what is the cost of your business? That is the thing. And you take the probability and then you say, are you ready to take that one? And I really liked it. And in fact, that conversation which I attended in a video conferencing was an amazing one. And what I find across is it is extremely difficult to sell the business to say that, you presume you're going to be ransomware and you're not going to be in a position to move. Okay. And now you think what you have to do. The CISO cannot tell this. The CISO will literally get eliminated. But the question is, the organization has matured. They kept the CISO, the CRO. They went through the learning and they are doing everything to correct it. So impact on business is the actual quantification with the probability. Together, you have to take a number and move further.
Fair enough. Rajesh, because one of the most important things when it comes to ransomware, right, is the fact that there is a human frailty element that comes into the picture. I was just curious, how do you account for the human factor when it comes to risk quantification? It's such a complicated thing.
No doubt. No doubt. I mean, I can tell you it's one of the most undefined, and I would be surprised if somebody can quantify a human behavior. Okay, and that's a key element. No, it depends on moods, it depends on sense of urgency, and that is where we always believe. And there's a hand raised for somebody. I don't.
We'll come to you, Partha.
So typically, it's very difficult to factor. According to me, I don't know if mathematicians or statisticians are working on some model to be created for human behavior, which can quantify risk because of either misconfiguration done by somebody or probably falling prey to a social engineering attack. But I think more importantly, that you have to believe that this is something, and all of us typically know that that's an obvious failure that we will end up with. I mean, people are the weakest link. You assess the infrastructure today, you don't change anything in the infrastructure. Tomorrow you do the same assessment, you will not come with something surprises there. Sure. You assess a human today, you do the same assessment tomorrow, the results would be different. Sure. Okay, so depending on in what frame of mind he is, what is he thinking, what is on his mood, how he has come from his home. I mean, there are a lot of factors. So it's very difficult to really quantify and judge and estimate what can go wrong potentially there. But typically the controls which matter more and are more, I think the focus should be more on is believing that the humans will fall prey to. And that is where and I am partially aligned, but I still don't 100% take that zero trust hype, to be honest. But that is something which actually is with that balance. Assume breach, and that becomes very apt and pertinent for a human. You believe that a person is breached. Now, how do you ensure that the infrastructure or the applications and all is still protected? Right. So, and how do you also make sure that you keep assessing them more often just to figure out that they are not falling prey to something very obvious? So you can understand there's sophisticated, there's stuff the people can fall prey to, but it should not be very obvious. So do awareness, keep focusing on simulations, keep that phishing simulation or red teaming, and keep doing all the basic checks, and but make sure that the hygiene. And to be honest, I am one guy who always believe all these technology investments, whatever you buy, if the cyber hygiene is not enforced in the organization, nothing will work. I mean, everything will have a weakest link out there in the cyber hygiene itself. And to implement the cyber hygiene or a cyber culture, people are the factor which play a vital role. So how do you ensure that in addition to the technologies, you may go for a multi-factor authentication? And we have seen recent breaches where even the multi-factor authentication has also been compromised because that was kept on a Google environment, which probably somebody was able to pick it up and all. So I feel enforce your controls, assume that a human is vulnerable, it can go fall prey, and try to strengthen it from all perspective. And while technology investments are good, but I still and that's undefined answer what you were asking me. How do you define, how do you factor human factor in a quantified risk assessment? That's an open-ended statement. I don't know where the answer is, but at this moment I am clueless on that.
Yeah, Partha, you wanted to add something?
Yeah, okay. I fully agree with Rajesh. If you look at most of the compromises, the starting point is inappropriate action by a naive person or a vested person, which starts the compromise. I fully agree with you. Now, on the quantification part of it, I wouldn't say a quantification as a monetary value. What I have seen and I observed is institution create profile of people on the basis of the behavior, and also conduct simulations to say that how they respond to various simulations. In fact, once an institution in the middle of COVID sent a message from the head of HR's mail looking similar to say that the institution is going to give $2,000 to every employee because this $2,000 was ringing in Canada and USA. Okay. And, you could see that it could very easily, that's what I really like what Rajesh said is, it was related to the COVID. It was appropriate because $2,000 was given in US, Australia, and in USA. So, and you could see most of the people who otherwise are careful, they fell for it. Okay. So it is a very, it's a momentary weakness, I would say. Okay. But what we found across was, profiles can be created on the basis of 10 to 15 parameters, what the person is behaving. On the basis of it, and the historical fact on a monthly dashboard could be given to the staff and to the supervisor to say that this is the a cyber profile of this person. If he has to improve his, like a cyber score, if he has to improve this, these are the areas where the person had an inappropriate conduct which has led to this. And it is given at the departmental level as well and at the individual level. So it becomes like one of the parameters for the organizational security awareness. Certainly, it is not a quantification, but it is towards handling that risk of people being the easiest point of compromise for the organization. And it fairly works well.
Just one thing, I think your video is off. So.
Oh, sorry. Okay, I didn't see it. Okay, sorry. So the question is, I don't know. It's not coming proper. I think it's not. Oh, sorry. I think it's not coming proper on the Teams, actually. I'm sorry. Okay. It's not.
Okay.
1 second. I don't know why it's coming horizontal.
That's okay. That's okay.
I think there is some problem with the Teams. So I'm saying across this. So this is something which is practicable. And, I could see it gives a lot of impact among the business people. They tend to motivate the staff to say that you must have a higher, better a cybersecurity profile. It is still, there are institutions which are trying to fix it and add it to the performance appraisal of the staff to say that you require a minimum of this amount of it. Okay, it is not yet come across, but yes, human being is the easiest link in this total game, and some amount of quantification is possible, and also, you could also do a search in the dark web and the deep web to say that how much of these identities are being used in the web, especially the company email ID and all those things. So,
Right.
I'm not saying it is a perfect science at this point of time, but it can show certain pointers and it could motivate the business person. I insist on business person because I feel neither HR nor CISO has the handle on the institution. It is the
Understood.
business person, and if they feel it is important, I feel it will happen. If they don't get motivated and impacted, it will never happen. Thanks.
Right. Partha, that's very interesting. I mean, to have individual scores of employees also taken into account. I think that's a very interesting thought. Anuprita, because this is such a complicated thing, how do you go about selecting the tools and strategies that are necessary for risk quantification? What is your personal experience in this?
So, for quantification, it's really very difficult because there is no very very static one, right? I mean, if you have static, then one is very important is to find out first of all the visibility about what are your total risk, and to have that visibility you need to consider different parameters like, okay, what is internal risk? I mean, whatever, so many activities, so many assessments what we do, and do we have a consolidated I won't say a CISO dashboard, but do we have a risk dashboard, right? And for every risk, yeah, so for every risk, whether this risk is having, what is your net risk and how much investment what you do and what is your ROI, that is what you need to think about it. And once you have that, then obviously you need to have I mean, not only quantification perspective, and as we all were talking about earlier, that one is that what is our risk appetite, and if we have to get our risk within our appetite, how much is the investment is needed, and if we have, if we invest, let's say 1 million, then how much risk it is going to reduce. And if we have that visibility, and again, the market is evolving, the practices are evolving, the tools are evolving, and only thing is that what is happening is that perimeter is getting blurred. So even if you have your internal risk monitoring perspective, but what about the supply chain, right? Even that is another very, very critical factor. We also need to keep it in mind that the supply chain attacks, the supply chain risk is where we also need to count in your whole risk quantification,
Right.
and have certain tool, to even monitor your third parties where you are doing the business outsourcing or technology outsourcing. Even that is also very, very important factor what we need to consider about it. But it's a very new area right now. I think it's a start, and I'm sure it will really evolve.
Right. Rajesh, I think I'm going to give you the most complicated answer question yet. How do you define maturity?
I am immature to answer that. No, on a serious note, it's difficult, to be honest. I mean, again, to me, maturity is against some standard or a benchmark. I mean, otherwise, if you keep an open-ended maturity, you will never end up with achieving what you want to achieve. So you may decide what you want to benchmark yourself against. Where do you want to? How do you measure? Say, very typical scenario, and that typically was followed for years, was reasonable security. So if I am having reasonable controls on all 5 pillars of NIST framework, to me, I can believe I am mature enough. Now, again, implicitly, while not explicitly, implicitly, I am putting a standard behind it, which is the NIST cybersecurity framework. So in a sense, if I have a benchmark against maybe a regulatory recommendations, maybe a regulations, I may show my maturity against those regulations. I may go in for maybe a peer comparison. I am mature compared to the peers. So I will believe that that's something which would be more practical definition of arriving at secure maturity. And if I put my independent hat up, I believe that maturity based security is not the right thing to approach most of the time. Instead, it should be risk based security. Because in a maturity based security, you will end up investing in controls just to meet that standard, not justifying where your weaknesses lie. Say, if and every organization has a different risk appetite, has a different kind of threats, different exposures. So you would be investing in the right places if you go with a risk-based security, that this is my exposure, this is where my internal or external attack vectors can hit me. Let me focus there. But if I go with a security chart on a maturity side, I will just benchmark those controls and say, okay, on this I am 5, but my peer is 7. Irrespective of whether the peer does the same set of business or not, I will start investing in. So your resources, to me, will be not appropriately deployed if you just go with the pure play maturity based assessment, unless it's a regulation. Because all of us believe once a regulator gives you a mandate, that is something which is beyond any question. You will have to adhere to it. But if there is other standards, it should be a mix of maturity and risk. I don't want to go into the standard software based maturity models, because the repeatables and all that stuff, they are good to hear, but I don't think so. When you go and do things on practically on ground, they may not be theoretically or just aligned as is. So maybe a complicated answer to maybe a simple question, but that's how I define maturity.
Right. Before I ask the next question, and I think that it would be generally the last question, I'm going to remind everyone who is hearing this that you can ask questions. We don't have much time right now. I'll go into the last question that I have, which is to Partha. Partha, what would you like to see companies who offer risk assessment products like Bitscore, for example? What would you like to see from them in the future? Partha, you're on mute.
Sorry, what is the question? Can you repeat? Sorry, I just lost it.
What would you like to see from companies which are actually offering these risk quantification software? What is the wish list of sorts for the future for them?
See, the greatest challenge, I just attended a seminar in US where somebody came and gave me a statistic to say expected cyber loss. Okay. So expected credit loss is done on the basis of the economic scenario, stresses, and the individual company's performance, etc., put together, you get an expected credit loss. Today, the world is moving towards expected credit loss rather than a conventional loss. Now, yeah, there are companies which says in US to say that they can create an expected cyber loss quantification for you. Okay, so that it becomes a number. Today, what happens across is you have an operational risk threshold. Okay, to say that you have a risk appetite statement expressed in the form of 0.5% of the profit. Okay, that is the operational risk. This one today, the problem with the cyber risk, it's 1 or 0, means it doesn't have what I call as an average loss. What happens is it will be a 0 loss or complete loss. There is nothing like this one. Second aspect is the probability of an attack happening and the type of attack happening is not similar. The resultant cash loss could be same, but every attack, whether it's a Union Bank of India attack or Bank of Bangladesh attack or Bank Muscat attack, every attack is unique by itself. It is not the actors might be same, but the technological impact and other things are totally different. So when I am asking the vendors, when they are going to say the probability is this for this risk, where do they get the data? So how do I believe that the probability data, what they have, is, today if you go to US, they have 100 years credit history. So that is used to create models. So where do you get the threats? The cyber threat is not more than 20 years old. So how do you get the probability, and which has a huge impact? And it's all one-off things. And it is not that it is a regular credit risk. Credit loss is continuous, whereas cyber loss is an institution might get attacked once in its lifetime, and that could be a very serious price for it. So how do we quantify that type of what I call as in our operational risk? If the impact is very high, the probability is low, the risk becomes average. But it is not so in cyber. If that particular event happens, the risk is very high for the organization. So how do I quantify that? That is what I would like them to come with, some type of a reasonable, scientifically acceptable suggestions or solutions. Hi, I think Nirmal has gone off actually.
Yeah, we don't see our host. We'll just quickly check. Give us a second.
No, I think he must have got disconnected. Either his battery went away or his network went away. There are only
that's a very close guess. Yeah.
This is one of the risks I think we didn't envisage earlier, but I think he will be back. Just to add to that, what Partha was talking about, right? One is that, see, we have a safe system, okay? So Nirmal, I was just filling your gap for some time. So let me just finish that for 2 minutes. Yeah. So so one is that, okay, we have a safe system, but we still continuously keep on assessing our own technical infrastructure, like what Rajesh was also referring, that having a continuous assessment, continuous red teaming, finding out what is going wrong. And I think Nirmal, answer to your question is probably, see, what the way we take care of security, we also need to have an eye on the third party where we are outsourcing our data or we are outsourcing our business process, because partially it becomes the extended arm of any organization, right? And so having a theoretical we do, and which we were just some time back, Rajesh and Partha both were talking about that. Okay, is it a static? The risk is very dynamic, right? And today I might be safe, and then tomorrow I might have ransom or rather malware based or bot based traffic going outside, because it's only a gray line. We are on the edge where one user downloads the malicious code and then we are gone, right? I mean, this is the kind of risk. And you also ask a question, how do you quantify the risk of a human being? And Rajesh gave a very complicated answer for a simple question, or simple answer to a complicated question, but it is really complex science and art both together. So even on a third party perspective, I think we really need to have eye on what exactly is happening, and the static, the traditional framework of having the annual audits and just question based or checklist based audits, that doesn't give the visibility or the risk, because every day risk changes, the threat landscape changes, and these kind of tools can at least give us the outside view about your own organization and about the vendor also, that okay, what exactly is going wrong. And if outside, if through a tool, if I get to know, obviously the whole dark web guys know that okay, this is the vulnerability which is available, and obviously it's a opportunity for them to have a business, which is the dark web business of hacking, right? So this is where we need to have a combination of insider and outsider monitoring, and then based on the kind of type of attack or type of malicious traffic, what is happening, I think we right now we are not talking about the preventive, but time to detect and time to respond is the factor what we need to consider in the center while we define the resiliency framework.
Right. I'm sorry about my internet. It's decided to ask. It's decided to show some risky behavior, I suppose.
So Nirmal, because it was you told Partha that this is the last question, so I felt very insecure that okay, last question is not on me. On a lighter side, yeah.
No, I think there are two questions more from the audience that have come. One is, do we have any basic risk quantification model based on IT system used? Mr. A.B. Nayak has asked the question. I'd like to remind everybody to keep it really short. That's number one. Would one of you like to take that?
See, I've come across a couple of systems. I have come across a couple of systems. You can just go across and say it. But when we went through the whole thing, we found that, we were not convinced about the data behind it. Okay, they are all more or less using the concept of probability impact. The question of the data available for the probability is where the system becomes credible or not credible. So, and we don't have a credit history of 100 years like what the credit business has. So, and also
Partha, sorry to interject. I just got a text saying that we are running out of time. So there was one more question which will have to wait. But thank you all for this conversation. I think it was extremely great for me to hear from all of you and understand this a little better. I'd like to shift the mic to Fal. I think he has a game of sorts for all of you. Thank you so much.
Thank you, Nirmal, for really hosting it very well. And thank you so much, panelists, for your expert opinion. It really matters a lot, and the industry have really taken this feedback and